PayPal?
All right. All right, guys, let's look at PayPal. So PayPal, $285 billion market cap. PE, really high, 68. That's an X. A good profit margin of almost 20%. So in the last year, they've had $5 billion in free cash flow. The last 5 years, the average 3.57. So since the last year is higher than the average of the last 5 years, it's probably on an uptrend, which we like a lot, okay? Return on equity, return on assets, 7.17%. Don't know why they don't have an ROIC. I want to check into that. But no dividends being paid. So far, 1 check and 1 X. Personal note, I love PayPal. I use PayPal to pay for as many things as I can. I believe they own Venmo. Venmo's phenomenal. It's a verb now. PayPal me and Venmo me are verbs, which is awesome, right? When people start the Cash App, they're like, Cash App me? Get out of my face, you poor person. Like, this is terrible. Like, give me a break.
Darnell made me pay it my Cash App.
Cash App,
Yeah.
really?
Yeah.
Did you throw it at him?
I was like, I guess
You take the money and bundle up and throw it at him? All right, so income statement. Let's look at the last 5 years. So the great thing about our website, guys, we can bundle everything in every 4 quarters. Like, Y-Charts doesn't let you do that. It either does the full year, which if the company ends in June, their annual yearly ends in June, you only get June of the previous year. So we do it different, which is better. 10.8 billion to 21.45, check mark. That's doubling revenue in the last 5 years. That's incredible. Profit, 1.4 billion to 4.2, check mark. Tripling profit. So they doubled revenue, tripled profit. 2 checks there, 3 checks so far, 1X. Shares outstanding. I'm actually surprised by this. It's actually down.
Oh, wow.
1.21 billion to 1.17, check mark. What was that, Mo?
I thought that it was going to be
I thought it was going to be increasing shares too. I would have thought they'd use it to like make acquisitions and stuff like that. Now, remember guys, when a stock price is overpriced, we don't want them to be buying their shares back. But be it as it may, we'll worry about that later. Let's look at the current assets. 48.7 billion versus 35.25, and they have enough cash on hand to pay off all their liabilities, $47 billion. So that's pretty awesome.
Yeah, that doesn't surprise me though.
Cash flow. Now guys, free cash flow is what I care about the most. Free cash flow is cash from operations less your capital expenditures. We have made it easy for you. I added this line to the investing cash flow section. No other cash flow statement has this except for the Everything Money app. And it just basically adds it all up for you and gives you average last 5 years. We have 2.49 to 4.9 check mark, which is an average of 3.57. With an average of 3.57, our pillar is to have the company be worth less than 20 times that average over the last 5 years. So the average of the last 5 years is 3.57 times 20 is $71.4 billion. The company is at 250 billion or so. Big X.
Yikes.
So guys, I love PayPal. I think they have a lot of growth potential. The question you have to ask yourself, and when our stock analyzer tool is ready, it'll be able to show you, based on your assumptions of growth, what the company should be worth. All right? I think 3 times more than the company, 3 times more than the 5 years average free cash flow is a little aggressive. In the last year, they did $5 billion. So it's $5 billion. 50 times free cash flow last year, that's a little too high for me.
Yeah, that's a lot.
But the great news about PayPal is it's very consistent with other companies out there that are tech. Great balance sheet, great growth, great everything there, valuation wrong. Be patient. Because when companies have good balance sheets, they tend to have good balance sheets for a long time. The operators of the business believe in that. So you just have to wait for the market to say, we don't like stocks anymore. You'll be able to buy these great companies at much lower prices.
Yeah, that's going to happen.
Yes, so I'm looking at this, and I also want to show you guys the 5-year chart. Oh, wow. Look where it got just recently.
Look where it got in March.
Geez, oh, Pete, it was at $304 just a month and a half ago.
Yeah.
Now it's at $242.
Yeah.
Last year?
That's with all that.
Oh
that's with the NASDAQ. All those tech stocks getting hammered.
You know what the funny part is?
Came down with it.
It was worth about what it was selling for in April.
Yeah.
That's what it was worth, about what it's selling for in April.
Yeah.
So it was only a year ago that it was selling for what it was worth.
And that goes back to our previous conversation talking about what we talked about with Mikey this morning. It is possible that we can get to these prices. We looked at Google last week. It's $2,000 now. It was $1,000 back in April. It's possible. It's
Not
very
possible.
possible.
It will happen.
Well, I say possible because people are like, well, this is impossible. Stocks only go up this and that. It's going to happen. It's just a matter of time. It might take some kind of crazy event, but they're going to happen. It's not like big events aren't going to happen anymore, you know? So
the only reason this is, what I asked my brother was this: Mikey, do you believe in cycles? The only reason this all happens is that the rest of time is a completely different story than the last thousands of years. Because we've had bubbles for hundreds and hundreds and hundreds of years. The tulip bubble craze in the 1700s, 1600s was the first
bubble.
The first bubble?
I think it was
a South China, South India company, or I don't know. But guys, bubbles have been happening forever. Booms and busts happen for every single time, every single history, every single moment has had bubbles and busts and everything. The only reason it's different this time is it's genuinely different this time. And I'm going to tell you right now, when the car was invented, it should have been different. It wasn't. When the plane was invented, it should have been different. It wasn't. When plumbing was invented, it should have been different. It wasn't. When the computer was invented, it should have been different. It wasn't. When electricity was invented, it should have been different. It wasn't. When internet was invented, it should have been different. It wasn't. When SPACs were invented, it definitely will not be different, and it won't ever. Listen, this is going to end up being ugly. Mm-hmm. I want you guys to remember that I want you guys being active today if you want, but be ready for falls. And when things do fall, I want you guys to get yourself into I've been learning that a fall in a stock that I like a lot is an opportunity to buy more as long as the fundamentals stay. Because guys, fundamentals, it's hard to change fundamentals. It's much easier to change emotion. The emotion will change a lot faster than fundamentals.
It's funny that when you're talking about SPACs, there was a SPAC that went IPO yesterday or something. It was in London, and it dropped 26% off of its. I mean, that's not typical for these IPO hype stocks. They usually just go 26% positive. And now they're going to big banks, Goldman Sachs and JP Morgan is saying, well, you screwed up this valuation. It's like, so there was one mistake. So now we have to figure out, because this one didn't go hype crazy, what was the problem?
Guys, look at this. February of 20, 33.93. March of 20, 21.90. You're telling me in that 1 month, fundamentals changed 38%. No. Emotion changed 38%. That's what you have to remember. Emotions change a lot faster than fundamentals change. Emotions will always change faster than fundamentals change. People's feelings can switch on a dime. This morning to now, I've been high, low, high, low, high, low, high. Not really, I'm not bipolar or anything, but I've had good moods and bad moods every single day, every single week, every single year. The market will be the same. It just takes a little bit longer, but the downside is when the pendulum swings from this side to the other side, the bigger the swing up here, the bigger the swing over here. Just be ready for that, guys. The more we go on the crazy end over here of overvaluation, the more we have to go to the other way for people to get weeded out.
So this is PayPal's chart. I'm zoomed out this far because right now it's a downtrend, and I just want to show you guys. So this is a 2-year chart. Every time that we have red here, these little red clusters, that means that the weekly stochastic has crossed down and it's a downtrend. Look how many times it has happened, and look how short these times are. This goes back to me saying, you guys, you need to know your stocks, and it'll be more beneficial for you. So right now, PayPal is a short. It's only lasted maybe 3 weeks or something like that. Is this really something that you want to get into as a short? If it's me, no, I don't. I'm going to let this go sideways, let the red line eventually turn up on me, and start getting these green candlesticks to move in that direction and go with it on the positive side. So this is a good example of why you want to know what your stocks are and learn their behavior, and just look at your stock chart as a book. That's why I don't trade IPOs, because I don't have all the chapters of the book. So the better you know them, more money you're going to make.
Thanks so much for watching the video. We hope you were intrigued. If this style of investing speaks to you, click the link below to join our Patreon. As a patron, you get access to a wonderful community of like-minded investors where you can chat, connect, ask questions, and share ideas with badasses like you all over the world. The best part is you get the amazing Everything Money software. This is revolutionary, unlike any YouTube page. You can track your investments, look at stocks, and quickly run our 8-pillar analysis on any company you like. The top tier patrons get direct access to Paul and Trader Mo. You'll see their daily trades, their updated portfolios, and every options contract they write on a daily basis. We provide Patreon exclusive videos just for you, including live streams and exclusive content from our team. Our bottom patron tiers fill fast, so join today. But hey, if you don't believe me, look at all of our patrons' amazing success stories. In comparison to other financial platforms, our software is by far the best value. This is your chance to get serious about investing. If you're finally ready to level up your investing game, join our Patreon and let's start kicking ass together.